We are the Gambling Databases Research Team, a group dedicated to delivering in-depth analyses of the global iGaming landscape. In each country-specific report, we explore key aspects such as local regulations, taxation, player experience, operator conditions, and emerging trends. Our goal is to provide a clear, data-driven understanding of how the gambling industry functions within each market and what makes it unique. And today, we are taking a long, hard look at Angola. Now, for anyone tracking emerging opportunities in Africa, Angola has, well, it's jumped right to the top of the list, and that's thanks to a brand new, comprehensive regulatory framework. But the sources we've collected, they paint a really complex picture. We see the central tension. On one hand, the government has clearly given the green light for massive market expansion, but on the other, the operational friction. I'm talking aggressive financial requirements, infrastructure constraints. It all creates this extraordinarily high barrier to entry. So this isn't just an opportunity, it's a strategic gamble.
It is. That tension, that really defines the entire market landscape right now. So our mission here is to guide you through the details so you can really understand that trade-off. We're going to focus on three key facets. First, the regulatory mechanics that finally open the door. Second, the astonishing demographic trends that are driving potential demand. And third, the critical operational realities, especially that cumulative tax burden and the absolute imperative of mobile payment solutions. And just to set the stage for how high the stakes are, the government itself has an incredibly ambitious projection. They anticipate that the licensed sector should contribute the equivalent of $100 million in annual revenue.
100 million.
100 million. And you have to consider this.
Yeah.
In 2023, the state collected only 10.6 million.
So wait, we're talking about a goal of nearly tenfold growth.
Exactly. And the question we have to analyze is whether the financial structure they've imposed actually supports or if it fundamentally undermines that enormous target.
A nearly tenfold increase is. Well, it's not just growth, it's a transformation. And to even dream of that kind of influx, the regulatory side, it has to be stable, attractive, and, clearly defined for serious international capital. So let's start there. The regulatory structure, the official green light. What institution is running the show, and when did this new online era officially begin?
The primary authority you need to be aware of is the Instituto de Supervisión de Jogos.
The ISJ.
The ISJ, yes. They are the market supervisor. Now, the foundational law is the Gambling Activity Law of 2016, but the pivotal moment happened very recently. The ISJ began accepting online license applications on February 18, 2025.
So that's the date. That's the starting gun.
That date signals the formal beginning of a structured, regulated online iGaming market in Angola.
And often when a regulator finally moves into the online space, they hedge their bets a bit. They might say allow sports betting, but prohibit slots, for instance. How comprehensive is the Angolan framework in terms of product verticals?
It's highly comprehensive, which, again, is a major upside. The framework permits operators to legally offer sports betting, online casino games, and gambling-related lotteries.
So pretty much the full suite.
Yes. There are essentially no major product prohibitions that would limit a standard international offering, and that makes the market immediately attractive to diversified operators.
Okay, let's talk mechanics then. If I'm an international group ready to allocate significant capital to hit that $100 million target, what are the entry requirements?
The ISJ has set a very high bar, and that's often a signal that they want high-quality, well-capitalized, and, compliant operators. The entity seeking the license must be established as an Angolan public limited company, a Sociedad Anónima.
Okay.
Now, the good news for global investors is that you're permitted 100% foreign ownership.
Oh, that's big.
It is. Unlike some jurisdictions, there's no mandatory requirement to take on a local partner just to fulfill the licensing criteria.
That 100% foreign ownership is huge for investor control and confidence. But if they don't require local ownership, what must be localized?
Local presence is absolutely non-negotiable.
Yeah.
And this is a critical operational detail. The operator must maintain a mandatory registered office in Angola.
Right. A physical address.
And more importantly, and this ties directly into future audits and compliance, all gambling transactions.
Deposits and withdrawals.
Everything. It must be processed through an Angolan bank account. You cannot run the cash flow offshore.
That reinforces their regulatory control. Makes sense. What about the commitment period? Is this a 1 or 2 year trial run?
No, the commitment is long-term, which is another powerful signal to the industry. Licenses issued under the exclusive regime last for 10 years.
10 years.
And they're renewable for successive 3-year periods after that. That 10-year term is a real differentiator. It indicates that the Angolan government isn't looking for a quick hit. They're looking for durable, long-term partnerships and infrastructure investment.
That's a strong statement. But let's use that as a point of skepticism. If the market is so difficult, which we'll get to, is this regulatory effort actually translating into action? I mean, what's the status of the market today? Is it still just a paper opportunity, or is competition already brewing?
Competition is absolutely brewing. The market is small, but it's regulated and active. As of early 2024, our sources indicate there were already 23 licensed operators.
23 already.
Yep. This breaks down into 10 focused on general gaming, 3 on territorial, so land-based, sports betting, and 10 already holding online licenses. This implies that the initial aggressive entrants who focused on regulation early on have already secured a significant first-mover advantage. They're now positioned to benefit as the market rapidly scales.
Okay, so the structure is in place, early operators are lining up. Let's turn to the demand side, the sheer scale of the consumer base that's supposed to drive that tenfold revenue increase.
This is where Angola truly stands apart. When we look at the raw demographics, the opportunity is, well, it's mind-boggling. Angola's total population is 39.3 million, which is substantial. But the single most important number for long-term strategy is the median age.
And what is that?
It's an astonishingly low 16.6 years.
16.6. Let's just unpack the strategic implication of that. Most markets are mature and aging. You're selling to an existing customer base that is slowly shrinking or stabilizing.
Exactly. This isn't a high saturation market. It means operators are investing in a market where there is a massive, continuous, and highly predictable wave of consumers reaching the legal gambling age of 18.
Year after year.
Year after year after year.
Okay.
This demographic tailwind provides a long-term organic growth engine that is almost unparalleled globally. You're investing now for consumers who, statistically speaking, are still in high school. That fundamentally alters the long-term marketing and branding roadmap.
But the reality is that those young consumers have to be able to get online. Let's talk about the digital divide. Just because they're young doesn't mean they're currently connected.
That is the critical counterpoint to the demographic potential. You're right. While young, the market is far from digitally mature. Internet penetration currently stands at 44.8%.
So just under half.
Right, which equates to about 17.2 million users. So that means roughly 60% of the total population currently cannot access online platforms, period. And furthermore, the market is highly centralized. About 68% of the population is urban. And the vast majority of that connectivity and spending power is concentrated in Luanda, the capital, which houses 8 to 9 million residents.
So strategically, operators have to acknowledge that they're currently playing an urbanization game. Their total addressable market right now is heavily confined to that urban core where the infrastructure is better. But what does that market look like economically? Because low penetration combined with low spending power is a recipe for very tight margins.
You've nailed the challenge. We have to look at the GDP per capita, which is modest, at about $2,580 in 2024. That translates directly into lower consumer spending power for discretionary items like gambling.
So we are not talking about high roller whale hunters here, we're talking volume.
Precisely. Our projections for average revenue per user, or ARPU, are extremely modest. We estimate it at only $50 to $150 annually.
Wow, that's low.
It is. Now let's connect that back to the overall strategy. If your average user is only bringing in, say, $100 a year, operators need massive scale. We're talking 50,000 to 100,000 or more active, paying users just to reach sustainable profitability. Low ARPU inflates the risk associated with every single customer acquisition cost.
And compounding that pressure is the high cost of living, which squeezes that discretionary spending even further.
Absolutely. The Angolan economy has been dealing with high inflation, which reached 19.8% in May 2025.
Almost 20%.
And even if that figure is coming down from previous peaks, nearly 20% inflation on basic goods severely limits the amount of spare cash available for entertainment. It forces operators to be incredibly disciplined about volume and operational efficiency from day one.
That sets us up perfectly for the ultimate operational reality check. We have immense long-term potential, low immediate spending power, and huge government ambition. Let's look at the financial hurdle, which I think is the most immediate threat to that $100 million target. The combined taxation structure. Let's unpack this because it is aggressively layered compared to most international iGaming norms.
It is the defining financial challenge of the market. Angola doesn't just ask for one tax, they stack three on top of each other. Think of it like three separate cash registers ringing before the operator sees a real profit.
Okay, walk us through those three registers.
Register 1 is the standard gross gaming revenue tax, or GGR tax. This ranges from 1.1% up to 20%, depending on the product. But for the core offerings online sports and casino, you should anticipate paying between 15 and 20%.
Okay, so 15 to 20% GDR is already on the higher end internationally. What's the next layer?
Register 2 is the standard corporate tax. The corporate income tax is applied at a rate of 25% on the taxable profits remaining after that initial GGR tax has been accounted for.
Okay. And the third layer, which seems to be aimed squarely at the consumer, is the player winnings tax.
Correct. Register 3 is the player winnings tax, which ranges from 10 to 15%. And this is crucial. It's withheld by the operator at the source when the player is paid out. This tax directly impacts the perceived payout ratio and can affect player retention and liquidity.
So if we combine those three, what is the realistic effective tax rate on an operator's overall revenue?
When you combine the GGR, the CIT, and the indirect pressure from the winnings tax, the effective combined tax rate that an operator faces, well, it's estimated by our sources to be in the punishing 40 to 50% plus range.
40 to 50% plus, that is monumental. Let's revisit our earlier points. If your average user only brings in $100 a year, and half of that goes directly to the state through various mechanisms, your margin for operational costs, marketing, and profit becomes razor thin. This is a capital efficiency nightmare.
It is, and it's important to acknowledge that the industry did successfully lobby the government a couple of years ago to reduce the rate from an even more staggering level.
It was higher.
Oh yes, it was nearly 45% flat across the board. But the current 40 to 50% burden remains the single most critical risk to long-term profitability and sustained investment in the market.
Beyond taxation, the sheer logistics of payment systems are complicated by Angola's reliance on cash.
Absolutely. You cannot ignore the fundamental banking reality.
Yeah.
You have a massive 50% unbanked population.
Half the country.
Half the country. If an operator relies solely on traditional bank transfers, they're locking out half of their potential market from the start.
So mobile money isn't optional. It's an absolute prerequisite for market access. Which integrations are necessary?
The priority integrations are clear, and they're essential for connecting to the mass market. You're looking at Multi-Caixa Express, Unitel Money, and Aftermoney. Mobile money is the path that converts physical cash into digital betting liquidity. It's how you reach consumers outside the formal banking system, which is crucial in Luanda and the surrounding urban areas.
And on the risk side, there is no flexibility in currency, correct?
That's a firm compliance rule. Prizes must be paid in Kwanza, the national currency,
Only Kwanzaa.
and strictly via bank transfer. This completely removes the option of using foreign currencies, or crucially cryptocurrency, to manage transfers. And you must track the currency risk. The Kwanza depreciated 10% against the US dollar just in 2024, which creates significant foreign exchange exposure for operators.
And finally, we have to talk about the infrastructure, the technology required to simply run the operation smoothly. What limitations are imposed by the environment?
The technology strategy has to be built around constraint. Mobile speeds average only 12.7 MEPs, and frequent power outages are a known challenge across the country.
Okay, so that's slow.
Very. This mandates a system that is first, mobile first, and second, critically, low bandwidth optimized. Your apps must function perfectly, even under degraded conditions. And if you're developing the platform, you have to prioritize the local device reality. Android absolutely dominates the market, claiming an estimated 85 to 95% market share.
So forget about iOS for the mass market.
Any operator trying to push an iOS-only or desktop-heavy solution will simply fail to capture the critical mass needed.
This all boils down to a high-cost, long-horizon investment. Let's integrate those capital requirement numbers you mentioned earlier. What does the initial investment look like, and how long does it take to see a return?
The initial capital outlay is substantial. Our analysis shows initial investment costs ranging from $480,000 up to $4 million.
That's a huge range.
It is, and it depends on whether an operator opts for a white label solution or builds a proprietary platform from scratch. And given that high initial requirement combined with the low ARPU and that aggressive tax rate, the realistic time to full capital payback is not quick. You are looking at a commitment of 4 to 7 years just to recoup your initial investment.
4 to 7 years is a lifetime in the iGaming sector. That means Angola is explicitly not a quick profit destination. It's a strategic investment for a massive long-term demographic payoff. So, if we synthesize all this for you, the listener, you have robust, legally defined access to a colossal, young, and increasingly mobile-ready consumer base. The government projects a tenfold growth trajectory. The opportunity for long-term scale is clear, but achieving that scale demands extreme capital efficiency, operational patience, and the ability to absorb that severe friction imposed by the layered tax structure and infrastructure challenges.
And this raises the essential strategic uncertainty you need to track going forward. The Angolan government has set this aggressive $100 million annual revenue target, yet they maintain a crippling combined tax burden of 40 to 50% plus.
Right. The two things seem to be in conflict.
Exactly. So will market competition, coupled with the inevitable operational feedback from operators facing these long 4 to 7 year payback windows, will that force the ISJ to lower taxes further to sustain long-term investment? Or will the government simply prioritize that short-term revenue maximization, potentially throttling the very growth they so desperately seek? That trade-off is the hinge upon which this entire market will swing.
For the full text of this and other country reports, visit our website at gamblingdatabases.com.